Qualifying income for MTD. Am I over £50,000? Are you a landlord or sole trader wondering whether making tax digital actually applies to you? Because here's the thing, a lot of people are getting this wrong. They look at their profit figure, see it's under £50,000 and assume they're in the clear. They're not. And on the flip side, some people are panicking unnecessarily because they think their total income from all sources pushes them over the threshold, when actually a large chunk of what they earn does not count at all. In this video, I'm going to walk you through exactly how HMRC calculates your qualifying income for MTD, what counts, what doesn't, and how to work it out for your specific situation, whether you have multiple rental properties, a mix of self-employment and property income, or income coming in from several different sources. By the end of this, you will know exactly where you stand. What is qualifying income? Qualifying income for making tax digital is the total gross income you receive from two specific sources, self-employment and property. That's it, just those two. The critical word there is gross, not profit, not what's left after your expenses, your mortgage, your agent fees, your repairs. The total coming in before anything is deducted. So, if you're a landlord and your properties bring in £58,000 in rent across the year, but after your mortgage interest, your maintenance costs and your agent fees, your actual profit is £22,000, your qualifying income is still £58,000. HMRC counts what comes in, not what you keep. This is the single most important thing to understand about qualifying income, and it's the part that catches most people out. What counts as qualifying income? So, what specifically counts? Self-employment income. This is all income you receive from working for yourself as a sole trader. Freelance work, consultancy, trade income, any business you run as an individual. The full turnover, before any costs are deducted, counts towards your qualifying income. Property income. This includes rental income from UK residential properties, UK commercial properties, and foreign properties. It includes all receipts from land or property, rent, service charges, and other payments received from tenants. If you have multiple properties, HMRC adds all the rental income together across the whole portfolio. So, 3 properties, each bringing in £20,000 a year, gives you £60,000 in qualifying income, even if each individually is under the threshold. And if you have both self-employment income and property income, HMRC adds them together, gives you £55,000 in qualifying income over the threshold for April 2026, even though neither source alone crossed the line. What does not count? This is equally important because there are several income sources that do not count towards your qualifying income at all. Employment income. If you have a salary from an employer that's taxed through PAYE, that does not count. Not a penny of it goes into your qualifying income calculation. Dividends. Income from shares, including dividends from your own limited company, does not count. Savings interest. Interest from bank accounts or savings does not count. Pension income does not count. Partnership income, income from a business partnership, does not currently count. MTD for partnerships is being introduced separately at a later date. Limited company income. If you own a limited company that generates rental income or business income, that income sits within the company and does not count towards your personal qualifying income. So, if you have a salary of £40,000 from an employer, plus £25,000 in rental income, your qualifying income is just £25,000, not £65,000. Only the rental income counts. This is a really important distinction because people with mixed income sources often overestimate where they sit. The 3 thresholds. Now, let's talk about the thresholds because MTD isn't a single deadline, it's rolling out in 3 waves. Wave 1, April 2026. If your qualifying income from the 2024 to 2025 tax year was over £50,000, you are in the first wave. You need to be using MTD compliant software from 6th of April 2026. Wave 2, April 2027. If your qualifying income from the 2025 to 2026 tax year is over £30,000, you come into MTD from 6th of April 2027. Wave 3, April 2028. The government has set out plans to lower the threshold to £20,000. The key point about these thresholds is that HMRC looks backwards. They use your previous year's self-assessment return to decide which wave you're in. So, for April 2026, they looked at your 2024 to 2025 return. For April 2027, they'll look at your 2025 to 2026 return. If you received a letter from HMRC in February 2026, that letter confirms you're in Wave 1 based on your 2024 to 2025 income. But even if you did not receive the letter, it is your responsibility to check whether you're in scope. How HMRC calculates and notifies you. HMRC uses your self-assessment tax return to calculate your qualifying income. They don't ask you to do this yourself, they look at what you've already reported. If your income triggers a threshold, HMRC will write to you confirming which wave you're in and when you need to start. That's the letter many landlords and sole traders have been receiving since February 2026. But, and this is important, if you don't receive a letter, that does not mean you're off the hook. HMRC states clearly that it is your responsibility to check whether your qualifying income puts you in scope and to ensure you are signed up and prepared when your start date arrives. You can use HMRC's own online tool on gov.uk to check if and when you need to sign up. Just search "check if you need to use Making Tax Digital for Income Tax" on gov.uk. What to do next? If you've worked through this video and you're in scope, here's what needs to happen before your start date. First, get HMRC recognized MTD compliance software. From your start date, the old HMRC online filing system is no longer available for people in scope. You must use approved software. Second, register with HMRC for Making Tax Digital for Income Tax. This is a separate step from getting software. HMRC will not do this automatically. You sign up yourself or your accountant does it on your behalf. Third, set up your digital records in your software before your start date. Import your properties, set up your income categories, and connect your bank feeds if available. The earlier you do this, the smoother your first quarterly submission will be. If you've done the calculation and you're in scope, don't leave it. April 2026 is weeks away for Wave 1. April 2027 is coming fast for Wave 2. RentalBux is a HMRC recognized MTD ready and built specifically for landlords and sole traders. Whether you have one income stream or several, UK property, foreign property, self-employment or any combination, RentalBux handles all of it under one license. Book a demo today, link in the description. See you in the next one.